que íbamos a traer un invitado importante. Su nombre, y no sé si le pido al equipo de producción que por favor lo ponga, su nombre es Don Steinbrugge, es un gran amigo, lo conozco desde hace mucho tiempo, pero independientemente de eso, para que tengan una idea, los fondos importantes de cobertura, los fondos de private equity, todo lo que tiene que ver con los fondos de infraestructura, por lo general tienen un departamento interno de relaciones con inversionistas, que son los que se encargan de levantar dinero de clientes, de inversionistas para el fondo, pero también usan firmas importantes que se encargan de ayudarlos a buscar esos inversionistas, sobre todo cuando son institucionales. Don tiene una de las grandes compañías al respecto, indudablemente una cantidad de años de experiencia, y por eso quisimos traerlo a la tribuna para que efectivamente nos pueda contar qué está pasando en la industria de los alternativos. Don, thank you for coming to our tribune, and we are very happy to have you here. As you know, we are the #1 channel in Espanol in finance around the world. There is a lot of people seeing you today. So my question is, what do you think is happening as of now in the alternative investment space, hedge funds, private equity, and so on, when you see a lot of volatility? People are a little anxious about that. Thank you, Don.
So I think a lot of the big institutional investors that invest in alternative investments are taking a wait and see approach. Things change every day. It's very difficult to forecast what President Trump is going to do, and he could reverse course at any moment. And the worst thing to do is make a big move in your portfolio and then get whipsawed. So the people who are getting hurt the most are those that got out of stocks, thought that the market was going to just go down twice as much as it actually did go down, and as soon as they sold everything or reduced their equity exposure, Trump decided to put a 90-day hold on a lot of his tariffs, and the market came roaring back. So, I think people just need to take a step back, take a deep breath, and just realize that when Trump negotiates, he comes in really hard at first, scares the heck out of the people who he's negotiating with, and then most of the time will take a step back and become reasonable and reach some type of agreement with people. So I think that's the highest probability of what's going on here. I think all the volatility has created a lot of dislocations in the marketplace. And I think, within the next month or two, I think you're going to see a lot of active managers do very well. Because when you have all these dislocations, all this volatility, it causes, certain securities to look much better than others. And that's when alternative investment managers tend to do really well.
Listen, Don, and one of the anxiety that I'm seeing over private bankers, wealth managers, they tend to allocate a lot to regular loan-only funds for the last few years. But lately, because of these volatility, they has been allocating to some managers. Some of them, as I told you off the record, they've been a little bit, I don't want to say mad, but they are disappointed with some of the returns. And you mentioned that we're going to see probably better returns down the road. What do you think are the strategies that are, let's say, overperforming in the long-short buckets of hedge funds? Because obviously you have different strategies like a multi-strategy, global macro, pure long-short equities, focus on China, or in any of the areas. In your opinion, where do you think they should start seeing more and more, because that might be the way to allocate in these times that we don't know, as you mentioned, when it's going to end and how it's going to end?
Well, the first thing I would say is for long-only equity, I think large cap growth U.S. stocks are expensive. And over long periods of time, you see fluctuations in the relative valuations between value and growth and large cap and small cap. And you also see differences over time in valuations between U.S. and non-U.S. So right now, I think value stocks look a lot better than growth stocks. I think small cap looks better than large cap. And I think non-U.S. stocks look better than U.S. stocks. So at some point, I think the valuation differences that have expanded to extremes are going to narrow, and I think large cap's going to underperform. U.S. large cap will underperform other strategies. As far as hedge funds go, it's a great environment for long-short equity managers. And, when you have all these dislocations in the market, that's when they do best, because especially lower net managers are making bets that some stocks are going to go down and other stocks are going to go up, and they try to hedge their exposure to the marketplace. And when you have all this turmoil, it causes valuations of individual securities to create inefficiencies, which allows people to outperform on both sides of the book. So I think market neutral or low net managers is a great place to put money. As far as global macro goes, they're having a difficult time, and so are CTAs. They're trying to time the market. They're getting whipsawed. They haven't done as well as they should. Maybe in a month or two, and things become more clear, I think those strategies might do well. On the fixed income side, I think it's the same thing. I think you don't want to have a lot of credit exposure in your portfolio. Credit spreads have widened out a little bit over the past month or so. But, with the tariffs going in place, you could see credit spreads widen it out even more. So I like relative value fixed income managers.
Listen, yesterday in the Wall Street Journal, we saw an article that was mentioning that Blackstone might be partnering with Vanguard and Wellington in order to go to the retail affluent markets. And probably they are seeing great opportunities in what is called the retailization, which is basically going to the smaller. What is your opinion of that approach on this major private equity shop? Not only that, do you think that the deregulation that we're seeing with the Trump administration will trigger lowering the potential threshold for accredited investors in order to allow managers to go after the regular small investor and providing some sort of these products that tend to be more prepared to control volatility, in your perception?
So I think it's going to be easier and easier for individuals to invest in alternative investments. And in the U.S., there's something called a 40 Act fund, and it doesn't have a minimum. A number of hedge funds manage 40 Act funds to get around the accredited investor regulation. The only thing I would say is there is an inverse correlation between how large a manager is and how good their performance is. And when you are talking about, some of the largest managers in the world, they are managing trillions of dollars. And it's very hard for them to outperform the market when they're investing that much. I think most people would probably be better off, investing in someone who has less assets under management and is farming their money out to outside managers, so there's no conflict of interest.
Last but not least, in our last question, and we're going to bring you more and more to the Tribune, is where do you think this battle with China will leave the potential private equity funds that are basically kind of frozen out there? If you see the news within the last 24 hours, private markets are kind of in a frozen mode. And there is a lot of anxiety, and we don't want to see any financial crisis, but I've been listening to a lot of anxiety for managers, and obviously on the private equity sector, which is extremely illiquid. They are extremely focused on running the business, but this is a very challenging time. You mentioned it especially very nicely that for the long-short equity managers, this is heaven. What do you think about the private equity? What do you think about this crisis with the China and confrontation with the U.S.? And where do you think it allows to have opportunities, if any, Don, in your opinion?
So, I think you've seen a lot of larger institutional investors reduce the amount of money they're investing in private equity. A huge amount of money is going into private equity. And a lot of these private equity funds haven't used all the money that they've gotten because they're having difficulty finding deals. So the deals they invest in aren't at the same expected return going forward than they would have been 10 years ago, because they have to invest they're investing so much money, they have to invest in deals that aren't as great as what they would have done in the past. So I'm not that optimistic on private equity. I think it's good to have some type of allocation of private equity. As far as China and the U.S. Trade goes, I think Trump is very serious on China. I think all these other countries, he wants to cut a deal. For most of them, it's not going to be that bad. We're just going to move forward with it. With China, you know, the U.S. has a $1 trillion trade debt to China. And I think he believes that China is engaged in an unfair trade policy. And I think he's going to play hardball with them. So I think it's going to be, you know, a rocky period. It'll be interesting to see, you know, what ends up happening. I think China doesn't, you know, want to, you know, they've had this policy and it's worked really, really well for them. They've grown their economy significantly by replicating other, you know, U.S. and non-U.S. companies and directly competing in them and limiting who can market their products in China. So we're ahead for some rocky relations with China, you know, over the next 12 months.
Listen, we're very happy to have you in the Tribune. Thank you very much for your time. Have a happy Easter, happy part of the holiday. You mentioned you're going to see your family, and we're definitely going to bring you within the next few weeks. We want to listen more about those long-short equity managers. Thank you, Don. It's a pleasure having you here at the Wall Street. Cheers. Bueno, ustedes escucharon lo que nos estaba diciendo